Hey guys, how's it going? It's the Crypto Analyst here, and I hope all of you guys are having a good morning, evening, wherever you guys are from. Welcome back to another Bitcoin technical analysis, and today I want to talk about and explain this little accumulation period that we're having right here, and how it's really more of a continuation period, and how I'm interpreting this. So I want to talk about not only this giant rising wedge that Bitcoin has, and how it's fallen out of that, but also how it's holding the 200 EMA, and what this means on both a 4-hour and a daily chart, talking about some of the indicators and oscillators, mentioning the MACD and the RSI as well. So if you guys are interested, go and stick around for the video, and do not forget to hit the like and subscribe button, as it does help out the channel a lot. But that being said, let's go ahead and dive on into this. So first things first, as Bitcoin was in this giant rising wedge, of course this is a bearish formation and continuation pattern. It was really just a matter of when it wanted to break down out of this. And so with this breakdown happening after the 9.2k peak on Bitcoin, it has fallen back to the 200 EMA, which is this pinkish purple line down here. Now this line has relatively held for a long time now. If we zoom out over here, we can see that really since February of this year is really the turning point, when instead of getting rejected from this 200 EMA, it started using it as support. And so when this started using it as support during mid-February, you could see that time and time again this was bouncing off of this, and it has done over the course of this year. And so once again, we haven't really touched this line since about end of April, but now that we're back at this at the beginning of June, we have seen 3 touch points off of this line, 3 little piercing candles, but for the most part, anything that was to the downside of this 200 EMA was bought up immediately. So following this, I want to go into and talk about, I guess, the 4-hour versus the daily comparison, because these are two very, very important time scales, especially when it comes to cryptocurrency, and how they actually have opposing and conflicting views. But what this could do is actually lead towards a bullish and bearish outcase scenario, depending on if you're looking at this on the short term or on the long term. So I'm going to go ahead and break down both of those right now. So on the 4-hour, which is obviously, I guess, a little bit more of the shorter term, this is looking a little bit bearish. The reason for that being is at least from the MACD's perspective, this is looking like it's setting up some double bearish divergence, potentially on, how you look at triple bearish divergence like this. But, nonetheless, this is actually getting shown as bearish divergence. Moving out to the RSI, what this does look like is, yes, this was a very, very nice bottom over here. It needs to get another swing low, probably towards this 30 point or somewhere towards this oversold area. I would expect something down here and then a very, very nice pump towards the upside. But what this is essentially leaving it area to do is actually leaving more area for the downside, because a lot of the times with the RSI, as shown over here with this very, very nice trend, actually I want to talk about this for a second, is that this trend towards the upside was actually broken. And what we see is 1, 2, 3, 4, 5, nearly 6 times the RSI on the 4-hour was setting higher swing lows, and I think that that's a very big thing. And so now that that trend is broken, we did see a pretty steep, all the way down to the 23 area on the 4-hour RSI. So what this would actually allow Bitcoin to do is for it to come retest this 30 range, hopefully set a higher swing low, and then bounce off of this area before heading higher. Now, this is a very reoccurring theme that you see on the 4-hour RSI of Bitcoin, are these higher swing lows and then a sharp rise in the price action of Bitcoin, especially from the relative strength index. So what this would be seen as is hopefully a retest of this oversold territory, so to say, and then a bounce in the price of Bitcoin. So what this would be is actually a pretty bearish in the short term, but bullish in the long term, because what this would be saying is, yes, it does have some more downside to come before, the significant bounce to follow this. So talking back about this could very well be seen as a bear flag or as a continuation pattern in this short-term downtrend. Yes, we are in a bull market right now, but this can be seen as a little bit of a downtrend, at least for the short term being over the last month or so. So this can be just seen as a continuation pattern downwards. Maybe we test the 200 EMA again, maybe we break it, but ultimately this does look like it wants to eventually go back up towards the higher range. And I want to go ahead and explain that via the daily chart now. So if we look at the daily chart, you can see very clearly that this MACD is rounding off towards the upside right now, saying that most of the bearish divergence, most of the bearish momentum is starting to fade away in Bitcoin. And you can see that on a daily time scale, which is very significant. So while the 4-hour was saying, yes, there is a little bit more bearish left in this market, the daily is saying that overall this is pretty much getting flushed out, and we are in, maybe the final week or two of this bearish sentiment. And then hopefully past that, we will enter into a more bullish summer for Bitcoin, maybe even see some higher highs potentially in the future. Over here on the RSI, this is saying that, again, it does have more room to move to the upside. I want to go ahead and erase this because this is all just from the 4-hour. But yes, it does have more room to the downside, but it also has a significant area for Bitcoin to really bounce in here. And it can really even see a retrace all the way back up to probably at least the 62 area on the daily chart, or even the overbought area around 70. And I think that that would make a lot of sense for me. So looking at this from the daily on both the RSI and the MACD, I do see potential upside on both of these guys. Yes, it did break down. Obviously, yes, it does still have more potential towards the downside. But I think that the overall sentiment of this market is still bullish because the trend is your friend. It's been an uptrend for nearly 7 months now, so all the way back since it bottomed in early December over here. We have seen consistent higher swing lows. We have seen consistent higher swing highs, and with this, that's what makes this a bull market. So the trend is just still your friend. Yes, the short term is a downtrend from the past, week or 2 or 3 weeks, but the overall trend over the last 7 months has all been upward. So maybe we see a retrace, maybe we do see a retest of this 200 EMA on the daily chart, but for the short term time being, it looks like this last little bit of bearish momentum is going to be getting flushed out here, and we're going to kind of see that play out over the course of probably the next week or two before seeing the bulls roll in. Now, I do have a couple areas that I am looking for if this is going to break down again. I think my number one thing that I've stressed in this video is that this 200 EMA is being very, very important. While yes, this does look like a little bit of a consolidation continuation pattern to me, just simply being that if we can draw this out, it came down, it bear flagged, it dumped, and then it's now setting up a little bit of just a consolidation continuation period, which could very, very well lead towards the downside again. Now, if this does end up leading towards the downside and the bears do play their cards right and get a good jump out of this, I think that there are a couple of significant areas that this can stop at. If it doesn't stop at the 200 EMA, I think that it can come all the way down to this previous top, previous resistance, now turn support on Bitcoin around the mid 5,500 range. I think that also a range that is very possible that could get used that did not get used on the way up is this mid 6,000 range. Yes, this was the hardest resistance in the history of Bitcoin, and it was absolutely, blown right through. It's not to say that it cannot be used as support now. So yes, I do understand that it was not used as resistance in any way over here, but it's still very possible that it could be used as support on the way back down. I'm not betting my money on it, but it's just something that it could be a meaningful area for Bitcoin. However, I do think that the more meaningful areas are going to be around this mid 5,000 range, and then this $4,200 range over here, which was the previous top of this ascending triangle, which really started this whole thing. So these are my two main ranges. Again, anywhere from around 5,000 to 5,500 I think is a really good area for Bitcoin. It's shown a lot of consolidation. Is where the last real support was, because if we go over here and we look in this range, anywhere from this $5,500 area to where we're at right now, there's not too much to tell us that we can hang on if a breakdown does happen. A little bit of choppy action in here, but nothing to hold my breath over. So with that being said, that's going to pretty much wrap up the video. Hopefully this was helpful and insightful and can be used for some educational purposes. This is really just my thoughts on the Bitcoin market right now, because it's been a little crazy and a lot of people are kind of at this stuck point where they don't really know whether it's going to keep going up or whether they think that it's going to just burst all the way down to $1,000. I think it's a very, very unlikely scenario that this thing goes down to $1,000 or anywhere near that range. I think that it's very clear that the bear market is over. I think the last 7 months have proven that. Not to say that we can't go down anymore, not to say that we can't test again this 4,200 range even, but I think for the most part, the bear market has proven to be over here, and that's just something that the last 7 months have shown to us as a reoccurring theme of higher swing highs, breaking numerous resistance points, and setting consistent higher lows. So thank you guys for watching. I hope you guys did enjoy the video. If you guys did, hit the like and subscribe button, as it does help out the channel a lot, and we'll see you guys next time.